All right, welcome back to another video. My name is Robin, and I am joined by Kirill as per usual. Yeah, we have been away for a while because we were working really hard on this new web app that we have. Because you might remember our Excel videos if you have been following us for much longer. But the app is almost ready. Kirill, you wanna talk more about
Yeah,
it?
the Excel era is finally almost gone, boys and girls. Yeah, we're getting to the point where the web app is almost ready. So currently, it's in a test environment, and we're about to launch it into production. So the whole idea of this video, is to finally show you guys what we've been working on. And yeah, we did not disappear. We're still here. We've been working hard, as Robin said, and yeah, we just want to show you what we got, pretty much. So let's get to it, I would say. And here you can see our magic. Sneak peek into the web app already. And yeah, let's start with, I think, the quite the hot topic, right? The semiconductor situation going on, and the
Yeah,
whole market is going bust.
exactly.
So we
Yeah.
can also showcase a few companies here and there. So yeah.
Yeah, sounds good. Yeah, so you can click the link that you wanna show the article. So it says here that hedge fund Elliott says that AI is overhyped and Nvidia stock is a bubble. So quite bold claims. But basically, as we understood, there's a lot of things going on in the tech industry, of course, with AI, but also tariffs with China, trade bans, whatever. So yeah, it took quite some hits on the market. So we're looking into it. Like, is it a good time for you to buy? Like, is anything really changing, um, or is it really a bubble? So we can go into it.
Yeah, so what we will look into today, we will look we'll make a sneak peek into NVIDIA, first of all, and just refresh our valuation on it. But we will also compare it to the other, let's say, big players on the market, such as Intel, such as ASML, and, for example, Micron. So we're just gonna take quite a few companies today. We're just gonna, do a cross comparison between a few of them and just see how, let's say, the whole sector is doing. Yeah?
And then we'll leave you with a valuation of Nvidia. That's what you'll get out of this video today.
Yeah, and of course a sneak peek into the web app. Ooh.
Of course. Yeah.
All
Let's
right.
do it.
Yeah, let's get into it. So yeah, when you see the lovely app of ours, you will see of course the graph, the stock graph of the company, and as you can see it, well, you don't really see it because of our lovely faces, but let me just try to show it to you guys. Nvidia took a bit of a hit recently, even though it's skyrocketed because of AI, because of all the hype and everything. But now people are actually calming down, and just the market is cooling off, right?
Yeah. So we can look at at the company description, and as we always do, the company foundations. But we can see a really high market cap. They pay a dividend that's just there probably for some shits and giggles. It's not really anything. But yeah, and the payout ratio is also quite low. So yeah, all things considered, PE ratio really high. So for the tech industry, so just let's call it the tech industry, right? It's of course we cannot compare it one by one.
Yeah.
Tech industry is quite broad, but on average, it has a PE ratio of 34. So right away, you could see like, okay, this is going to be towards a more overvalued valuation probably.
Yeah.
Gross margins are looking really, really good. That's really high margins, and the operating margins are also really high. So that's something really positive you want to see first glance. If you can scroll down a little bit,
Yeah.
we can see that for the check marks on the company foundation, average revenue growth is good, net income growth is good, average cash flow, you can see it, except for average share buybacks. They have been diluting quite some bit, not a lot, but just, you rather not see that. You rather
Yeah.
see share buybacks. So you want to switch to another company right now, so we can just
Yes.
compare. For example, yeah, what's the PE ratio
What you
of
simply do
ASML?
then, yeah, look, yeah, let's do SML. So you can just plug it in the search, and then you will see SML. And then, yeah, so the P is 50. Yeah, also quite high, right? Also pretty
Yeah.
expensive. But you can also see across both of the companies, they got at least quite some good, check marks when it gets to
Yep.
revenue growth, free cash flow growth. And even ISML on top, they also grow their share buybacks and dividend, which is also nice to have,
Yep.
of course.
And
Never
of
heard.
course, we're now comparing these companies. They're not direct competitors. Let's say they're not in the same space. But just for your understanding, that we're just trying to see like, okay, what are some similar companies with who could be hit by similar news and similar developments. Yeah, and which one would be interesting. So just so you know why we are comparing these two, for example, and
Yeah.
others that we want to compare.
But we can also do, for example, we can also check another fun one, which is Intel, right? INTC. We just plug in the ticker symbol, or you can just type in the name. Also, yeah, looks very doomy and gloomy, which went down literally by 20% yesterday on the earnings. So everything just literally looks like painted on red. No dividends, no free cash flow growth. The company looks terrible. So that's just also another, let's say, cherry on the top, saying that like not the whole industry is doing well. Of course,
Yeah,
NVIDIA being the leader in AI and then providing the graphics card and the computation power, but Intel is completely on the other side of the
yeah.
story. They're not ahead. They take
Heather,
a lot of money to invest in the new production facility in US, and yeah,
yeah, yeah, exactly. So yeah, that's what of course. So that's the beauty of this new platform, right? It's like it's easy. You can just type it in, go through different companies that you are interested in, and you can just quickly see, like, okay, which one are you interested in? Like which finances appeal to you?
yeah. We
Do you want to
tried
do one more?
to yeah we tried to pretty much do similar, let's say, feel in touch to our like previous Excel file, but we of course added way more design parts and all the nice looking things, and of course it's way more stable, way more reliable, as you can also see.
Exactly.
um yeah, what else? Micron, for example, also a chip manufacturer. Here, yeah, you also, as you can see, it also doesn't do very well. So it was going to the peaks of, let's say, $150 per share, and then now it went down to 92. So that's also quite a tough hit, huh?
Yeah,
And
exactly.
yeah, and if we see, let's say, yeah, it's also more or less, green light, right? Apart from the fact that, for example, Micron doesn't have the same, increases in revenue and net income. The free cash flow grows quite significantly over the past years, which is a great thing, but still quite questionable in terms of like the potential of the company to grow the revenue in the future.
Yeah, exactly. All right. So now that you have kind of an idea what, yeah, how easy it is with our platform just to switch between these companies, we can go back to NVIDIA and we can
Yep.
do our evaluation as per usual.
Yep. Exactly.
Um, so yeah, like I said, like high PE ratio, so probably gonna be on the more on the overvalued side of things. But as we've seen with the other companies, it's quite promising, especially looking at their margins. So yeah, we made everything quite a bit more visual, and of course these things are they can change, right? So how it looks right now, it's not the end product yet. But yeah, if you can go down, Kirill, we can see some
Yep.
key financials like revenue is growing, gross
Yep.
profit looks really good.
Yep.
Research and development's also increasing. I'm not sure what that has been doing, like percentage
Well,
wise.
that all makes sense, right? As well, because if you look at, for example, R&D, if you are a manufacturer of hardware or software, it doesn't matter. If you want to stay ahead of competition, you
Yeah,
gotta spend the money, right? So, and that's what you see. Like, okay, with the increase in revenue, there's respective increase also in the R&D expenses,
yeah,
which is that's just the way how industry is. But yeah, you guys also gotta keep in mind that the sales also come with quite a cost, right? So
yeah, yeah, exactly. So selling and general expenses are also having similar patterns, it seems. So just yeah,
yeah, but
they're selling more, but they're also marketing a lot more.
also keep in mind, as we can see, right? So the expenses, selling and general expenses, are 12.3 billion, and R&D is even less than that. So they also still have to put some money in the bank to actually advertise and
Yeah,
their products, which is it's okay. It's still doable because your revenue is 80 billion, like for 2024 so far. That's great. That's amazing, and the gross profit of 60 is still great as well. But if they're gonna hit more competition, or if the demand is gonna go down, questionable. Be careful.
Yep. All right. So yeah, we can just continue. We don't have to go to all of these. Just if you
Yep.
see some nice.
Yep, yep. You guys know it. It just looks a little bit different. A little bit more visual. So yeah, but then you can also,
Sure.
for example, just extend things, and then you can see it all nicely and visually and everything. So yep.
Exactly. All right. Yeah.
Shall we move on to key
So we can
ratios really quick? Or
exactly.
yeah,
Yeah.
all right.
So
Go
here we
ahead.
see a lot of green, right? So yeah, something you would like to see. So we see high net earnings ratios, high interest expense ratios, which is yeah. I mean, it lessens the tax burden, but these are quite high numbers to be honest.
Yeah,
Um, yeah, the research and development ratio, especially 2022 and coming up to 2024, yeah, more or less
20,
20%.
16%.
It's
Yeah,
not that bad to be honest, especially in 2023. So that's okay. It's actually quite fine. Selling in general, see there, marketing
yeah. It's also
again
above
a lot,
15%. Yeah,
but it's not that bad. Could be worse, could be worse. So looking
yeah,
probably around 20% normally.
yeah,
So that's okay.
yeah.
Yeah, free cash flow growth. We
This
can see
is
that in 2023. It's
Yeah,
very
this is
interesting.
rather very questionable, but also one of the reasons for that is the turbulence in the all that chip industry because American companies are soon to be banned trading with China. So Nvidia selling, let's say, having the majority of its revenues coming from China, it's 30% of it. They actually had a lot of the orders coming from China just before the ban. So it's also something to keep in mind that a lot of the revenues potentially they're gonna disappear at least from the the regular products. So yeah, you guys should be careful when it gets to this one.
Yeah, and I can also see that for the first and second quarter, I'm just looking this up. I
Mm-hmm.
just want to see, for example, yeah, how is the inventory doing? Are they actually selling the things that they're making?
Mm-hmm.
But I can see in my corner of my eye that they are increasing their inventory since
Mm.
the first quarter. So hopefully they're selling a lot. Well, they're producing a lot more, so because they know they can sell more. But I guess we'll have to find it out at the end of.
And it also could be dangerous because let's say in majority of the world apart from let's say China, the interest rates are still reasonably high, so it means that people get less access to cheaper money, but it's also about the regular retail customers. um, Maybe people cannot really afford, let's say, to get the $1,000 worth of graphics card. So that's also something to keep in mind because Nvidia products are not that cheap at all. So in the in the times of let's say economic uncertainty, people are not going to be buying the chips. They're going to be
Yep.
buying bread, water, this kind of stuff, but not expensive luxurious things.
Yeah. Exactly. All right. Yeah, we see similar patterns. But then I can point out that they have been buying back shares in 2023, which is something really good. So they have had a 1 to 2% dilution over the past years. But it's good to see that they have been changing that and that they are investing in something that they know, which is themselves. It's good to see. Um, we can go down. Career, if you don't
Yeah,
see anything else. Yeah, gross margins are really high. Something that's really good to see.
yeah,
Normally around 20% is really good, but this is outstanding. Operating profit margins also above 20%, which is insanely high.
yeah.
So I mean, they know how to sell. So even though they're spending a lot of money, they still have a lot of room, yeah, to make money, which is really good to see.
No, and
So
it's
based on that, it would be, it seems like a good company for sure.
Yeah, I completely agree. When it gets to them having a good grasp on making money and finding the niches when you can which you can capitalize on, um, Nvidia is great. Honestly, like no problems with that. But it's also comes with its risks, right? Because if you're gonna be like, for example, betting on AI, sure, you're like, let's say, the company who is selling the shovels during the gold rush. That sounds great, but then at some point the gold rush is going to be over, and then the question is, would they be able to also find another, gold rush kind of
Mm-hmm.
event,
Yeah.
or maybe or create another product? So that's also something for you guys to keep in mind. So far, so
Yep.
good. Knock on wood. Sounds great. I fully agree. I do not have any negative, let's say, connotation against Nvidia, but I also just want to be, let's say, the bad cop.
Yeah.
on the other side, so that just we could paint the whole picture as well in here.
Yeah, I think things will look a lot gloomier in a bit, but we can go down to the valuation if you want to.
No, I would love
So,
to.
also this looks quite familiar and also not. We made things better for you, and also yeah, just really easy. So now we can, for example, see the average revenue growth already. You don't have to look into it. PE ratio for highs and lows, averages. So it's easy for you to take a grasp. If you want, of course, to do some more research, you can take longer periods of time for more accurate averages. But these are just as more of a screening. You can see the cash flow growth, so you can also use these numbers, right? Whether you want to use, for example, revenue growth or cash flow growth for to
So we're just
basically
literally trying to make your guys' life easier, so you don't have to
yeah,
go to other websites. We can just take it from us and from
exactly.
our database, and it's like quite visible for you guys right away.
Yes. So let us show you how to use these numbers. All right. So for the free cash flow starting point, this is for the discounted cash flow formula. Back in the days, you had to do these things manually. Now you can just, for example, pull last year, but you can also do more of your own assumptions. So this is again giving you a bit more freedom in what you, for example, think, is going to happen in the future,
Yeah.
and base your estimations on that. So the projection period, as per usual, it's 2, 5, 7, 10, 15 years. I mean, for NVIDIA, 5 years max, right? Because it's quite especially now, it's quite not a risky business, but there's so much going on, and tech is developing constantly. So you don't know if NVIDIA is a winner now, but a loser next month.
Yeah.
So yeah, 5 years is the max here. So discount rate, we normally put it at 10%, but once again, it's something free for you to choose and to play with.
Yeah.
Estimated growth rate, so we can use it either average revenue growth, or we can use a free cash flow growth.
Yeah.
I would stick with the revenue growth. That's already quite high. So I'm not sure even how realistic it is to follow that per se.
Or we can also check the analyst estimates, right? Like what
Yeah.
we've been usually doing before. So if we, for example, go to the same Yahoo Finance, and then if we click NVIDIA, just gonna just quickly search it up, and then so that would be in statistics, if I recall correctly, right? We're both being rusty a little bit because it's been quite some time since we did a video, but yeah, if
Now you can
Robin
put it.
help
You
me
can
out.
find it in analysis,
Analysis.
and then yes, and then if you go down, you can see the growth estimates.
Yeah, revenue estimates, sales growth. I think they also changed the website a little bit, right? Oh yeah,
Yeah,
growth
there we go.
estimates, yeah. Yeah, so for next 5 years, they also say they also expect
per year.
40,
year.
yes, 46% of revenue growth, and that's, keep in mind, ladies and gentlemen, that already currently the free cash flow is 27 billion. That
Insane.
would be quite insane. Is it realistic? Is it doable? Yeah, of course, everything is possible. Yeah, you can even say 100% a year. No biggie. But yeah, what's the probability of that? That's another question.
I would just say like even putting 25% per year is quite high.
Yeah, right.
But let's just do that for now. Just
Okay.
otherwise it will be insane. That won't be doable at all. I think, in my opinion.
Yeah.
Or highly unlikely. Projected PE ratio. Well, we can use the averages we've been using.
Sure.
So the average is 71,
That's already
which
also
is
sounds crazy.
really high.
Yeah.
What is it now? We can go up. We can check what it's.
I think
at
now it's PE of 60. It
Yeah.
could be also that it was not updated because the database might not have been updated since Friday. But we can check real quick on, for example, Yahoo Finance. Let's check, just to be on the safe side. PE 62.
Yeah,
So it's
okay.
more or less about right. Yeah. So also still crazy number, insanely crazy, because you're literally paying some unreasonable money, honestly, for
Yep.
that. But well,
All right. So let's just keep the 70 and just roll with that.
yeah,
Required rate of return. This message is always the same. If you want to invest in ETFs, you expect something like 7 to 10%, but you're doing stock picking, so you have a bit more risk. You want some more reward. So let's just say 12%, right? The 2% is your risk added
Yeah,
for
sure.
what it will be if you buy a
Yeah,
ETF.
12%. Yeah, would also fine.
Margin of safety. Okay, so depending on how much you know about the industry, what's coming, I would, for me personally, I would rank this around maybe 20, 30 even.
Yeah, yeah,
Um,
I would agree. Yeah, because the thing is the way how volatile it is, how news affect the stocks so quickly. Like even Nvidia was, such a great, one of the best AI stocks and everything. It can still jump up and down 10% a day. That's just
yeah,
insane. Like
yeah,
if you're like a value investor like us, when we are actually try to provide some reasoning behind the prices for stocks, right? Not just trade it on the news. That's very volatile. And to me, I would like to have some safe space on that as well. So
yeah,
yeah.
exactly. Also keep it at 30%, and then we
Mm-hmm.
hit the analyze button.
Yeah. And what we see?
There we go. All
Wow.
right.
Yeah, but
So
that makes sense.
yeah,
The NPV formula, showing us crazy numbers just because of the estimated growth rate and the PE. But
yeah,
the other uh, the other valuation formulas, yeah, they are not that happy
yeah,
and rainbow looking kind of
exactly.
things.
So what this basically means, and we can play with these numbers more, of course. But I mean, what this basically means is that you would buy this at 187 bucks if you want to make a 12% return, basically, with of course a margin of safety priced in. Um, and yeah, so this is again the beauty of our tools. You can pick and choose what you like Kirill said.
Yeah.
If you don't really buy the constant growth rate that's uh, insanely high with the insane high PE ratio, yeah, you can remove the intrinsic value from your calculation and just run with the ones that you believe and trust. If you of course want to have the average valuation, then yeah, it's a buy. But again, how likely is it that they are able to keep up with such a pace?
I fully agree.
That's the more of the
Yeah.
story, and that's something for you to decide. So that's also why our whole like web app is of course based on starting your due diligence. Is it something you want to look in further, and then you can fine tune your valuation, and then you can make a decision whether or not you want to buy.
Yeah. And for example, yeah, just to back up what Robin said, right? We can, for example, change the growth rate to, let's say, something more realistic, say 10%, right? And PE also then respectively would go down to, let's say, 35, right? Then the prices would also go down, for the majority of the formulas as well. So they would also change. So it really depends. And then, for example, if you want to also change the cash flow starting point, so let's say maybe 10 billions, that would also change. That would also change the numbers around. So guys, also keep that in mind. Then it's really a lot about you understanding, let's say, the industry. It's a lot about you just doing your own homework, right? And then just trying to understand what's happening in the industry, in the economic environment, and so on and so forth.
Yes. All right, and I think with that said, it's a wrap. First valuation with our web app. For
Mm-hmm.
now, normally we would show you where can you buy the sheet, or at least the web app. But for now, you can subscribe, hit the bell button, for example, and just keep updated. And we'll let you know when we launch our web app right here on YouTube and our other social media platforms. So
Because
follow us there on Instagram, X, wherever, and yeah, we keep you updated.
Yeah, and because on top of that, let me just give you also a small sneak peek into the other functions. Because, for example, if you're happy with your valuation, you can also add it to your watch list. And then you will be able to see your whole watch list with all your assumptions and everything. So, for example, where's our lovely NVIDIA? This probably would be on the second page. But then you can also delete it, for example, and so on and so forth. So you can see, like, for example, I already added some of the valuations. You can also change, for example, your percentages of assumption when the company is overvalued or undervalued. And of course, our lovely macroeconomic dashboard, where you can see a lot of like different, macroeconomic indices and whatnot about a lot of countries: China, Germany, Netherlands, USA, Japan, everything. So a lot of juicy things are coming up. So yeah, as Robin said, stay tuned and see you soon, guys. Hopefully.
Bye bye.